Hello and welcome to Macro Mondays powered by the Goxstein News Network. I'm your host Landy and today is December 15th, 2025 and we're looking at Bitcoin on the daily to start. We will look at Dow, NASDAQ, and SPY as well today, but we do want to see kind of what's going on with Bitcoin here on the daily, and then we'll go up and take a look at the weekly, as I do think that there is some pretty interesting things at play here. First thing to note here is Bitcoin did break down below the $89,000 inflection point inside of this weekly structure that Bitcoin has been trading in since, well, in terms of trading in and closing in, since back here on November 24th. Now, it's been 22 candles, 21 closes inside of the $93,500 higher low close and the $86,000 lower high close, with the common swing point between those two big weeklies being at right around $89,000 for the higher low. When we saw the 93.5 close come in, we had a higher low come in at around $89,000. And then also when we saw the lower high at $86,000 for the close, we saw, well, the lower high swing came in at 89. That has acted as an inflection point. You see, after testing outside of the bottom side of the range since closing back inside of the range, first candle back in after a 3-candle structure that did come down and test another weekly down here at 80,000 to 80,500. We saw a swing outside of this range up to $89,000, slightly above. Well, Bitcoin came back down and swung outside of it and then rallied to the top side at 93.5, but got no closes above, and then wedged itself between that 93.5 close to 89 for quite some time. We saw that break down on the Sunday candle coming into Monday and then test down outside of that $86,000 level. Now, Bitcoin is back testing this area yet again, and it's pretty easy to identify the conditions here. If we do see a close below $86,000, if we haven't already seen Bitcoin test down to around 85 again, then I'd be looking for a retest of 85. Next big area to pay attention to would be the daily over here, right around 84.5 to this swing low at 83.8 to 84K. Now, that doesn't do too much, but if we do start to see Bitcoin trade below 83.5, this swing low, I would be looking for Bitcoin to potentially head down to, well, there is a level at 82.5. I'll show in just a moment. It's on the monthly. It's also a lower second on the weekly, but realistically, I'd be looking down to $80,000 for a swing of this swing low, or a sweep of this swing low, right at this big weekly area, which was a lower low, to $78,000. This would be the zone of interest initially. If we did see $78,000 dropped, then I would be looking lower to the mid-70s, specifically down to that big daily monthly level on a swing basis here on spot at 74,420.69. Yes, I'm going to say it every time, and yes, it is a rhyme. Look, nobody can say that Bitcoiners don't like memes, because we like to stick meme numbers in our price action for spot all the time on swings and closes. Now, that would be what to watch for to the downside, especially as the daily as it relates to some of the higher term time frame structure. So realistically, it's kind of a zone between 86 and 84, 83.5 to 84 between these two swings here. And if we do see it dropped, we're either already testing down or will test down further, especially on closes below 83.5. I would be looking towards 80 to 78 initially. And then if we did not see a bullish reaction out of those areas, I would be looking lower on breaks below 78, bringing into play that monthly higher low swing. And of course, the daily levels in and around the mid $70,000 region. Now, that being said, back above, and by the way, you're going to hear a lot about a bear flag, as this is a technical pattern that many are pointing out. But, it's not, well, the early stages of it could be playing out. You got to be aware that the horizontal levels in the auction matter more. And if we do see this area here hold up, especially on closes inside of this weekly lower high area at $86,000, look for moves back to 89 that can get above the Monday high. And maybe even, I would even rope in around that 90,250 to 260 area. Then we could potentially see a rally back to the top side weekly here at 93.5. And now it's really about getting above the weekly on closes at 93.5. We haven't had any closes above here since the move down. We have seen closes essentially right on it, a few swings above it, and then a wick right to it or a swing right to it at 93.5. But really it's about 93.5 to, 94, 640 here on the swing high outside of the top side of this range. And if we did see, any price action above there, I'd look right to the most volume or the highest volume traded price, which is just above $96,000. You can just call it 94 to 96 if you like, above that 93.5 weekly. If we see closes above there, I would expect 94 to 96 to get tested. Anywhere above there, you can take that up between 96 and 98, the bottom side of the next big weekly overhead, which is at 98 to 101. If we did start seeing price trade inside of 98, look to the top side at 101, with potential for 102.5 to a major fib level at a 1272 on a fib extension for log scale here at around 103,650, which has acted as an inflection point. Even the big dump off after on spot on the 10th of October, we had the big dump off to 107, right? That's actually up here, right? A lot of derivatives went down to this weekly level. But we saw on the big dump off, it went right to 107, 108, which was a weekly higher low structure that was put in over here. It was also a daily on the way out of 112 here that turned into a weekly level. And then price tried to hold up in there on weekly closes. We'll take a look at that in a moment. But realistically, that is an area that was retested already. So we dumped down through it, 107 on the close, retest, and then came down to the next weekly 98 to 101. So if we did see price move back up, especially on expansion, which I'm going to show you in a moment here, I would be looking, above 101. I'd be looking to 102.5 to 103,650 here by the fib, and then possibly a retest of 107, 108. But this is inside of the context of a much wider weekly range, even at 102.5 to 112. So this is big resistance overhead. And of course, Bitcoin is testing downside right now. So not really in play at this particular moment. I'm going to show the expansive look that is in play for price action right now and something to pay attention to as it relates to higher term timeframes. Forgive my voice. I'm still getting over a little bit of a cold here. Now, Bitcoin's lower second standard deviation is right at $86,000. How would we confirm expansion? Well, we would get expansion on closes below it, and of course a break below the weekly at $86,000. But true expansion won't kick off until we see, closes specifically. We can get swings through, but closes below 83.5 to right around $84,000. If we did see that, I would be looking for expansion down to the next big weekly level at that 80,000 to 78, possibly more on the board down to mid 70s. Now, to the top side, if we do see Bitcoin trading back above $89,000, be aware that the basis band is right around that 90,000, 90,300 area. But above there, we could see, a move up to 92 to 93.5. And if we did start to see closes outside of the top side of the swings of the range here, I would be looking right up to 96. Excuse me. My apologies. Anywhere above there would be expansion into overhead resistance, 98 to 101 initially. So pretty clear setup here on the weekly. It is about the closes when it comes to expansive posture or volatility expansion. And in this case, I would not be ruling out a test of the low swing over here and even into this 78 to 80 initially down here and then see what kind of reaction we get if it does get there. Front run of that would be something like swinging below the lows here, 83.5 to 84, hitting a monthly and a weekly level. I'm going to show you at the lower second, right around 82.5, and then closing back above 83.5 to 84, and then regaining 86. That would be, a fairly, a counter trend, but fairly juicy area to look for some potential longs. You'd have to evaluate it at the time. Of course, that's all theoretical in terms of setup on what to look for if we did see a move like that play out. Now, we're going to turn off the support and resistance areas of interest, take a look at the weekly, and then we're going to wrap this up by looking at Dow, NASDAQ, and SPY. But let's go to the weekly and take a look at the setup on the weekly, because there is something interesting happening here. Because Bitcoin has gone sideways, the lower second standard deviation of the Bollinger Band set here has passed price action, and it is sitting right at a monthly level, which is at 82.5. And if you'd like me to reference that level, that is going to be this guy right here, 82,534. That is the monthly higher low close. It has been swung already, but I want you to notice that 82,534, 537, it's just adjusting around ever so slightly as the weekend, after the weekly candle closed and then opened again. This was essentially dead on that monthly close open right there at the lower second. What would I be looking for again on the daily? You can safely swing it, but if we see closes below 83.5, essentially, I'd be looking for the lows to get tested at minimum on a swing. Here at $80,000, which is this weekly over here, to the $78,000 weekly. That'd be initially where I'd look. Now, I would be aware that after a lower second passes price action, we would need to see closes down below the lower second for continuation. Otherwise, if we did move below 82.5, we'd be looking 80 to 78. But if we close back inside, just understand, especially back above 82.5, that eyes on potential upside. Right now we have, off of this uptrend, we have a trend break to a lower low, lower high swing. We do not have a lower high close yet, because last week would have needed to close below 83.8, 84K, depending on your chart, in order to paint a closing lower high. But we do have a swing downtrend in place as of this weekend's inverted hammer. So what does that mean? Technically, we would get a lower high close on any close below 87,565. But if we don't see any closes below 83.8, doesn't mean much in my book. And realistically, we could even swing the lows, but as long as you see price closing back above 83.8, that would be a decent zone to look for potential upside back towards this high at 94,640, that daily level, and then to 96 to 98, and then 98 to essentially 101, possibly above there to 102.5 to 103,650. All right, so what is the interesting thing about the weekly right now? Well, I want to call out that if the lows hold on a close, specifically on a close, meaning the low holds on a close above 80,524.65 here on spot, we have a regular Stoch, and this is not a Stoch RSI. This is a regular stochastic momentum indicator. Stoch RSI is just an indicator of an indicator. It is the momentum of RSI, which is a momentum indicator already. We already have RSI. There's no need to check it. There's not much going on at the moment that is of interest, although we will take a look at it, I guess, for today, and then check in on it closer towards the weekly, because this is a weekly time frame. But in this case, if we did hold that low on the weekly, you can see that we are at a Stoch momentum read of right around 14 or so, which is below the prior area here, which had that closing low at 78. So if we closed above you know, the 80,500 swing low, well, that would put it above that $78,000 area. Even if it hits it on a swing, it's about the close. We would get a bit of a momentum divergence if it can hold that area, and then we'd start to see stochastic momentum turn back up. Doesn't mean much in the context of what we're seeing here, but we would get some bullish divergence off of this area as well if we did see a low set. And I do mean closing low, not a swing low. So it would have to be at minimum, a closing low. And in this case, the only way to set a closing low from this week's candle would be to close above that 94,640. That would throw two divergences, bullish divergences in this case, where we have lower low RSI. This would be a hidden bull div, right? Hidden bull div, lower low, higher low. Yeah, right? Yeah. Or regular bull div. I don't remember anymore. I'm tired, man. And I know this stuff. If it is going to be because it's not a higher low, it would be a higher low relative actually. So it would be a regular bullish divergence, right? I don't know, man. I'm so tired right now. Either way, we'd also get a momentum divergence as well. I'm usually on my game, but I'm still recovering from being sick, and I've been talking all day, and I'm very tired. But yeah, I would be looking out for a potential momentum shift, and realistically, that can only occur on closes above 80,524 now. And then setting a low. There's no way to really set a low this week unless we see closes above 94, 640 here. Technically, you would see it set, above like 94, 182, but you'd need to see for like a real confirmation and to get above the lower first here. You'd need to see 94, 640, 66 and start heading up to 96, 98 to 101, so on and so forth. That would also give Bitcoin the potential to maybe test up further above 101, which is this close right here, into, 102.5. Again, like I'd mentioned, you got 104.5, 105 area. And then these two swings are already encompassed where this next area is at 107, 108. And this is where Bitcoin tried to hold itself up before moving to the next weekly here between 101 and 98. Before falling down to the next weekly, right, which was this guy over here, 93.5, which was this candle right here, to 89, which it fell through all in one fell swoop to hit this low close here, lower low close at $80,000. And realistically, the next one to sweep on a close would be that 78. It's fair game down to the mid 70s from there, 76.5. 55 to that 74 for 2069 if it did do that. All right, let's go ahead and take a look at let's take a look rather at traditional markets and take a look at Dow. Weekly closed on a higher high. It did not close above the swing high. I mentioned this. It closed it did actually, my bad. It's kind of a grind sideways and up after a correction to the 20 simple or the basis band here. This is from a weekly standpoint. You have a lower low to higher high. If it did come back down, you'd have to see closes at, danger below the basis band. Obviously, even below the upper first, it'd start to look kind of nasty to the downside, which is at 47,650. Then we'd look to the basis band somewhere around 46,500. And then possibly the actual, this was actually a higher low, my bad. In terms of swing downtrend, though, it was, we had a swing trend, higher high, higher low, higher high, lower low, but it was a higher low close at 46 to 245 to the swing low there at 45,728 or so. Realistically, the daily is going to tell you a better story here. This is where we have higher low structure here, unlike NASDAQ and SPY, which is breaking structure. It's all about the higher low, the last higher low in a daily close here at 47,573 to the swing low, which is coming in at 47,462. It can swing it to the basis just below there at 47,350 or so. But realistically, even if it's swung, it's going to start to look like any kind of move even back up. If it were to close above this higher low, might result in a lower high. But this is, it's a grind sideways and up for Dow. Just pay attention to it. Potential upside towards that upper second, which you can see it continuously getting tagged here, is right around $49,000. Same as where we were last week. Now, we do have a higher low that painted on NASDAQ for the daily, and then I'll switch to the weekly. I know I started with the weekly and then flip to the daily. We're going to start with the daily and flip to the weekly for NASDAQ. I talked about the move to the basis band for a gap fill. We did now see that gap fill come in, right? The low came in essentially right on the close where this gap kind of started. And granted, this gap was kind of filled already, but it has now been filled. And that's right around 25,000. If it does drop down lower, I would be looking down to the lower first here at 24, 670, 680 area, to this swing low at 24,600. If that's dropped, we're heading down to test the lows down here, anywhere at 24,250 to the actual lower second would be fair game to start, just shy of 24,200 to 250. Back to the upside. If the basis band is recovered at 25,180, we can start looking back to the upper first standard deviation at 25,680. For now, the weekly looks ugly. Ugly. This is an ugly looking weekly. This looks like a structure change on NASDAQ, to be quite honest with you, with a lower low to a lower high. Now, this is not locked in just yet, as the close did come in above 25,158. But if we get any closes below there, this will be a lower high. And we'd be looking down to the basis band right around these closes here. The twins in between the big old bear bar there, right around 24,600 rather. Sorry. Anywhere below there, we start looking towards, an area of interest around 24, that 221, to the weekly lower first, which is now right in line with the swing low of this lower low at 23,854. Back to the upside above the upper first, 25,300, 330 area. We can probably look back to the highs around 25,758 to the actual swing here at 25,835, and then we'd be looking right up to that upper second around the all-time high area at 26,000 again. SPY. Oof, SPY's ugly too. By the way, if SPY paints like this, anywhere below, I'd give it a little bit more room. The upper first is really going to be the inflection point here, 678. This will be a double top with a lower low swing in place. A bit of a higher low close here as it relates to the close down here, but would not look good at the highs here, and likely targeting, anywhere below the upper first. From a weekly standpoint, we're looking for a drop down to probably 664, 665 to start. Any swings down below there to 660 are going to start to look like they want to go for the 650 area by the lower first. If it can maintain above the upper first here at that 678, 680 region, we can look back to the highs here, 690 to 695 by the upper second. From the weekly standpoint, daily, sideways, ugly looking right now. But again, it can safely come down to the basis here. Maybe even go for a bit of a full gap fill at 675, as long as it's closing above the basis at 676.50 or so. It preserves its shot for volatility as an area of interest back to, the high here at around 684, 685 to that upper first, just above it, just slightly above it at 686, 687, and try to go for a break above 689, 690. From a daily standpoint, we could look, the weekly is around 695. We could potentially rope in that 697 to 700 area if it did shoot back to the upside. That's pretty much all I got for you today. And I'm going to talk to you again on Wednesday. This is, again, a very important week. This is the last full week of trading. Next week, there will be a shortened session on the 24th and then day off on the 25th. And then the following week is a shortened week for the month, right? We're coming into the monthly close midweek and the following week for New Year's. And most pros are off, next week and the week after. So lower liquidity environments, a lot of moves already accounted for, a lot of moves already made. But that doesn't rule out, players stepping into the markets and moving them. So just, head on a swivel for the rest of this week. Definitely watch the weekly closes for traditional markets and Bitcoin. And of course, I'll check in with you on Wednesday for the Wednesday check-in, and we'll get a better handle on where things are going this week. And that's really all I got for you for tonight. I hope you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care.